Okay, first off, I want to go through and take a look at some of the tools that I've provided you guys in the past and make sure that you know how to use them and what you're looking at. So much about trading is structure and discipline and organization, but you're going to get a lot of different tricks and tips from mentors like myself over the years. Being your lab instructor and a mentor for all of you guys, I definitely want to make sure you know how to use this stuff, and that's why we're going to go through them one at a time and really work through it and make sure you understand it. First one is going to be the OPJS. No, actually, let's do TTOS V4. Now, what TTOS V4 stands for? And you're going to have different versions of these over the years. And if I was more creative, I would have come up with a name. And actually, I didn't come up with a name on this one. This is Tackle Trading Options Spreadsheet. Fairly descriptive, right? TTOS, Tackle Trading Options Spreadsheet. So what TTOS is for is it gives you guys a way to kind of get structured, disciplined, and organized when you're researching specific options trading strategies. And that's kind of the whole point. That's the value of it. Let's take a look at TTOS V4. Now, Coach Matt, my brother, has also done some of this over in Tackle Trading in some of the videos. And you've probably seen a lot of my videos on how to use TTOS V4. You'll notice different tabs at the bottom. And let's start with that. Okay, you'll see covered calls, naked puts, bull put spread, bear call spread, iron condor, short strangle, and then your resource links. Now, I've just put in a few resource links like Options 101, how to use different expirations, the Greeks, option question answered, things like that. Some different option videos that you can look at, just so that you can link back out of them if you want to see some tutorials on how to use each one of them independently. Now, let's start with covered calls here, and let's put in a few symbols. Rig, Ford, Microsoft, Apple Computer, big name companies that you might trade over and over and over again. Now, once you've identified companies that you want to trade, and by the way, let's think about that. To use the OP or the TTOS spreadsheet, okay, you have to choose a strategy. Then you find some candidates and then fill it out. Okay, so if you're going to first choose a strategy and you don't know which one, well, just start with the covered call. It's the first one for a reason. You'll notice from left to right, covered call, naked put, bull put, bear call, iron condor, short strangle. There's actually a sequence of logic to that. That's the nature of which I usually recommend traders learn the strategies. You start with the covered call, then the naked put, then the bull put, then the bear call, then the iron condor, then the short strangle. Now, by the way, some traders don't ever move past the first two. I think in trading we tend to have an instinct to want to make this stuff too complicated. You don't have to do that. You can keep it fairly simple. Now, let's go over to Tackle Trading or even FinViz and take a look here. And the markets are up today. Now, one of the things about FinViz is it's got a screening tool. I'm going to click on Screener here. And under the descriptive tab, I'm going to put in some basics to go find us some candidates for a covered call. So finding a stock, by the way, once we chose a strategy, we said covered call. Now, if we find some candidates, we could just do what I did to start with. I could just put in stocks that I already know are good candidates for covered calls. Or I could go screen. Okay, why don't we do a little bit of both here? Let's say here, descriptive, we always got to put in the price. Let's do between 5 to 50. Usually smaller is better for covered calls. It's got to be optionable. It's got to trade over 1 million shares a day. Let's make it so it's on the S&P 500 so that these are big liquid companies that we can work with. Let's make sure it pays a dividend, and let's do it over 2% minimum. It's going to knock us down just a little bit. Doesn't have to be great long term, but let's say it's over the 20-day moving average and the 50-day moving average. And let's click on fundamentals and make sure the PE ratio is under 15. There's only 7. So here's a bunch of candidates that we could use for covered calls. Low valuation, so that means they're relatively cheap for their earnings. Short-term trends are moving up. Intel here, that's an inverted head and shoulders. So, you know, as we find candidates, GM, inverted head and shoulders about to break resistance. Dow Chemical. So as we find candidates, we're going to come over here and we're going to say, okay, DOW, General Motors, INTC. These are big names that might be relatively good covered calls. Let's go with those 3 from that list. I like Dow, breaking resistance from an inverted change. General Motors, long-term downtrend, hit a low, new high, higher low, about to break out. And Intel, okay? Those would be relatively good candidates. So the question comes back to, well, we chose a strategy, okay? Let's see here. Some people would say, well, Tim, why not naked put? I don't like covered call. You could have chose something different. We're just doing this as an exercise right now. We found some candidates. We used a watch list. Plus, we also used a scan. Now we're going to fill it out. 10-4. Let's go ahead and do it. Now, my recommendation is to use 2 screens. Okay, in lab, we only have 1 screen because it only lets me share the 1. So we're going to stay on the 1. But I do like using 2 screens. If you can't use 2 screens because you don't have 2 screens for whatever reason, well, use 1. Make the best of it. Get a notepad, get the information that you need. Essentially, to be able to do a covered call trade, we need price, month, days till expiration, call sold, delta, and credit. Let's take our first one here, rig. Okay. Oh, think or swim. Of course, performance problem, always with you guys lately. Okay, let's take rig. Let's put it on a piece of paper. Now. You know, some traders are going to think, Tim, covered calls, those are boring. I don't care. I don't think they're boring. I think they're actually very empowering. You know, I had a student come up to me, and I was over the weekend. I was teaching a class, and they said they were kind of an experienced trader, and I had been teaching covered calls, and they said, Tim, you know, covered calls, you can make a lot more money with other stuff. It's not really a greed strategy. And I said, I'm not in the greed business. I'm in the business, okay? I'm in the let's make money consistently, and let's make sure that we're building the correct thing, you know? And I think that's a very important mindset to embrace. So let's get the information we need for rig, RIG, TTOS V4. So we got price here. All right, price month, DTE. Call sold, delta, and credit. Okay, now the rest will kind of fill itself out. So how do we find this information? Well, the price is the stock price. It's right here at the top of the screen. It's also over here on the right, 1409. You'll see where it says 1365 in red. Well, that's for the red line here, the moving average. 1611 in green, well, that's for the green line here, the moving average. 1408 is my price. Now that's the first bit of data that I need. Okay. The expiration. Well, we're going to go click on Analyze. I like to build mine in the Analyze tab. One great thing about some of these big name companies is they have different expirations in here. I tend to like to be around 30 days of time for a new trader. So I'm going to click on the 32-day option, and that's our expiration. So the November 32-day option. The call sold. Well, if it's a $14 stock, let's go back to our spreadsheet, and I'm going to show you something pretty neat here. If you come down here into the spreadsheet, it will say we're going to sell 1 to 2 strikes out of the money. It says the rule right there. 1 to 2 strikes out of the money. So if I come out here and then I look at this, the difference between in the money, 14 strike, 14.10 stock, see how it's shaded in Thinkorswim? So the 14.50 or the 15 would be 1 to 2 strikes out of the money. Now if there's value on 2 strikes, that's good. That will give me some potential for my stock to grow as well as for my call to give me a credit. So I'm going to use this 42 delta, sell the 15 call. That's going to give me a 78-cent credit. Well, how did I find all that information? I built it, okay? It's all right there. Now, I have strikes on all. When you do iron condors and things like that, you might need to hit the chain that way. When you do a covered call, you might just put strikes on 4 because you only need 1 or 2 strikes out of the money. Simplify the visual on your screen. Now, the midpoint between bid and ask was 0.78. There we are, okay? Good. So then I take that information, I go back to the spreadsheet, and I fill it out. So I say price. 14.08, I believe it was. This was the November 1 expiration. There were 32 days. We sold the 15 call. The delta was 0.42. The credit was 0.78. Now what that does for me, and this is kind of the beauty of the spreadsheet, what that does for me is it fills out all of the ROIs and does all of the calculations to let me know if it hits good standards for my trade. Well, the max profit is $1.70. The credit ROI, that's how much money you're making from the credit alone without making any money on the stock. Well, that's 5%. Okay? And this is on no margin, by the way. The max ROI is 12%. The standard credit ROID and the credit ROID. You probably need to go to a mentorship to get a full explanation of this, but what ROID is return on investment divided by delta. We're taking our credit and our probability and trying to turn it into some kind of mathematical calculation. If it pops up in green, that probably means it's good, right? Well, this one's green, so this one hits our rules. Now, by the way, all of the rules are down here underneath. How to trade it, that kind of thing. So should we trade RIG? Well, it depends on your system. What I would recommend is whatever stocks you put on the list, you would go through and you would calculate all of the potential for each candidate and then go back and look at the chart. You know, you'd go through each one at a time. Ford, Microsoft, Apple, Dow, GM, Intel. Now, we picked RIG. Let's go do another one. Let me show you Ford. We won't do all 7 of those for our lab because we want to bounce through some different ideas here. So then let's look at Ford. So what is it about Ford Motor that looks pretty good? Well, if we look at a long-term weekly chart, well, I don't know. I mean, lower low, lower low, lower low, kind of a downtrend here. Maybe it doesn't look that good. The only thing about Ford is we know who Ford is. Some people would trade it just because they're comfortable trading Ford Motor. It pays a dividend. It's relatively good value. I think we're going to skip it for right now. I actually don't mind it for a covered call, but I think we can do a little bit better. Let's look at Microsoft, Apple, Dow, GM. Let's pick the stock we like best first, and then we'll do the research on it. So Microsoft's got a big upward moving candle, good long-term signal on that, but it's also in this kind of compression downtrend. By the way, don't overthink charting if you're new. Just look for trends that you like. Apple's kind of sitting at a low. Covered calls, we're going to put it on weekly chart. More of a reversal in there. Okay. Dow Chemical. Yeah, I hit the 200 period moving average on the weekly chart. Found some support down here on an upward move. On a daily graph, it also is in a W pattern that recently just triggered today, actually. You know, hit a low, W pattern, breakout, showing some strength. That could be a candidate for sure. We also put GM on the list. See, this is where you really, really have to know your strategy, because if you're buying these stocks as a one-off trade, the chart means a lot more. If you're buying these stocks for a long-term portfolio that you plan on doing covered calls on for the next, say, year or two or three, well, then you need to look at the fundamentals more. That's why we looked at PE ratio. We're going to consider sector, that kind of thing. Why don't we choose Dow Chemical? Let's put it into our spreadsheet, and let's run the numbers. Okay, so we have to find the data. What do we need to find? We need to find the price. Price of Dow Chemical is $45.54. Okay, that's up here, right here in this red number. You'll also see it over here. It's moving up and down a little bit as we go. Once I lock it in, I wouldn't worry too much about it. Now we analyze it. Now we need to find the expiration. There is a 32-day November. That's what we'll use. The call we sell, 1 or 2 out of the money. There's money on the second one out, so I'm going to use that one. This one right here, $46.50. The delta is 0.43. The credit is 1.44. Now, delta is this column right here. Credit is the distance between these two numbers right here. So I'm looking for both of them when I'm making a decision on what to sell. Then all we need to do is come back over here, click on TTOS, and let's take Dow Chemical here, put in the price. $32. So if you have 2 monitors, you just fill this out as you go. If you don't have 2 monitors, then you kind of write it down on a piece of paper like I just did. And then when you come over here, you can then fill it out and get all of the information that you need. So which one do we go with? Well, we should feel comfortable going with either. You know, RIG looks to be better value, right? Dow Chemical looks to be decent, yellow and yellow on the credits. We did like the chart. There are other considerations as well. You know, you might go back and look at where the dividend is. That might be a consideration, and when the earnings is coming up to let you know how it's going to impact your trade, that kind of stuff. You know, so many different ways to do this. So why don't we go ahead and click on the Analyze tab, and we'll just show you how to build the order on both. So if you want to trade a covered call in Thinkorswim, and you're in the Analyze tab, find the option you're going to sell on the call. Right-click, Buy Covered Stock. Now I want you to double check that with your eyes. It does say buy covered stock. Okay, buy covered stock, because even though we're going to sell that call, we have to buy the stock first. Okay, now this price, $44.10, that came in my window is the difference between $45.58, subtract the call value. Now, if I know I want to send it, I just right-click, confirm and send. Read the order dialog, and yes, now I am in. I've put an order in for my covered call. Hasn't filled yet, so let's do rig just to see it. Maybe. All right, RIG. There we are. Find the option I'm going to sell. 32-day option, 41 delta, 15 strike. Right click, buy covered stock. Now this one's a lot cheaper stock. It's only $1,400, for 100 shares, and the other one was $4,000 for 100 shares. So maybe I do 300 shares, which means minus 3 contracts and plus 300. Go ahead and confirm and send and push those through. Now, when you're trading, there's so many different things to learn. Believe me, I get it. I understand. You know, you have to learn how to check your working orders and read your statement and manage your positions and on and on and on and on and on and on and on. I know, new traders have a lot to deal with. Well, nobody said it was going to be easy. They just said it was going to be worth it. They said that you got to work through it and make sure that you learn how to go through every component. Part of the reason why we trade structure and we create these spreadsheets and all that kind of stuff is so that you have some stability to come back to and say, okay, this one's good, this one's not, that kind of stuff. Now, the TTOS V4, we started with covered calls. If you trade the other strategies, you got to learn how to fill these out. Now, do you have to use the spreadsheet? No. So if you're going to use the spreadsheet, say thank you to the team who built it. That we've had a few traders working on it over the years. It's an evolution, you know, of this document. It's not just me that worked on it. Marius is a big contributor. I've had many contributors, though. You know, say thank you to the team that used it. If you don't like it, you do not have to use it. But I'm looking for positive feedback. If anybody has anything they think that they could change in the spreadsheet, definitely submit that inside the clubhouse. Go into tackle trading, click on the clubhouse, and say, I have a really good idea for something I could make really awesome in TTOS. That would be welcome. Going in and saying, hey, I don't like the way this is, that's not welcome. So we are pillars of positivity. We help each other out. We build each other up. That's what I believe over at Tackle Trading. All right. Now, second thing is, after you start using the spreadsheet, covered calls, bull put spreads, bear call spreads, whatever strategies you use, maybe even get into the iron condor. You know, it'll help keep you structured. There is some busy work to fill out. Some people hate that. I get it. You got to just know your strategy and know where you're at. If you're struggling, you know, with the kind of basics that it takes to put trades on, you might need to go through methodically and fill out your information. Okay? Just think about it, right? Just think about it. Where are you at? As a new trader, you might want rules. In fact, as a veteran trader, you want rules. So go through and make sure you learn and understand each and every one of the rules. Now, this is TTOS. We've done a lot of videos on how to use TTOS. Let's talk now about something different, which is the OPJS. I talked about TTOS. OPJS, I'm telling you, we are super creative. We can write lyrics like Bob Dylan and David Bowie combined. Now, OPJS, you guess it, guys, options, portfolio, journaling, spreadsheet. Options, portfolio, journaling, spreadsheet. That's all it is, okay? Now, the idea behind the OPJS, the options, portfolio, journaling, spreadsheet, and this is more a little bit of a newer document. It was an old daily journaling document that I had, and we've been working on it lately. We're going to put a lot more into it. The idea here is to get a feel for what your portfolio is doing. One thing that I have seen over the years is that students and new traders, they don't have a grasp on their overall portfolio risk. Let's go through and define a few characteristics. Date. Well, that one's pretty obvious. What day is it? Okay. Check a calendar. That one should be easy. You should be able to pass that one on the test. I had a professor once tell me, Tim, if you can't get your name right, you probably don't need to fill out the rest of the test. Okay. You know, same thing with the date. Just look it up on your phone, look it up on a calendar. Account value. Depending on where you trade, this is a different term. In Thinkorswim, it's what they call net liquidation. Now, make sure that you select an account. See, if I click on all accounts up here, and by the way, let me see here. I don't know how to do this. New system at Thinkorswim. I wonder. We don't need privacy on. Turn that off. Okay. If I have all accounts set here, it says 359. If I only have my margin set here, it now is going to show a different number, 161. If I have my IRA set here, it's going to give me an even different number, 198. So you have to decide what account am I measuring in. For this one, I'm going to do my margin account. It's where I trade my options at, okay? I'm going to do my margin account. So net liquidation and day trades. This one says 161, 185. I don't worry about the decimals. Some people are very, anal about that. I wouldn't worry about it. I would just get the one number. If it moves on me, that's fine. 161, 246. 161, 246. Okay. Available funds. In Thinkorswim, they call this option buying power. It's 40,700. I'm going to talk about all these components here in just a minute. 40,700. This means that I'm 75% allocated into the market. This is an important question, and this is an important discussion. How much of my capital should I trade? If you always think of your system as one big pumpkin pie, coming up on fall season, so pumpkin pie sounds good. It's how much capital should I trade? Should I trade 50% or 25% or 75%? Right now in this portfolio that I'm running, I have 75% in cash and 75% in trades and 25% cash. Okay? That's about within my rules. You should sit with a mentor and talk about that. Depending on how you trade, that is going to be a determination you have to make. How much of my capital should be in cash for hedging and new trades? How much of my capital should be in the market? When you're in virtual, put that pedal to the metal. Let's see if we can run it into the red and spin it off the road. Not a big deal. You use your money. Don't overthink it when you're in virtual. Right now, I'm 75-25. Are there some systems that should be 50-50? Yeah. Are there some systems where you should flip this and only be 25% in trades and 75% in cash? Yes, there are. Futures trading systems that already have access to a lot of leverage, you don't use all of your cash. Okay, I know a futures trader who he'll only go in 20-30% into the market at any time. That's because the market he trades is very leveraged. I know Forex traders like that. One of the mistakes leveraged small accounts use is they think that they have to use all their cash. They don't. Your position already has control of a lot of value by being in that position to begin with. Now, if you're an options portfolio or if you've got a lot more going, yeah, let's get our money to work. If you get your money to work and you know how to control it, you can make more money. Now, let's go back and look at this. So here we are. These are my trades. And I've got Forex. I keep track of that separate. I've got some futures stuff. We'll take a look at that as well. We've got all of our things going on. Now, 161414, that's our number. By doing this over time, it will keep track of my equity curve. Okay? But before we go there, I'm going to tally up all my trades. I need to know how many total, bullish, bearish, neutral, and then we're going to do some mathematics. All right, total number of trades. There's no simple way to do this besides click on this, go to old layout, and count them up. Okay, 1, 2, 3, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 6, that's just an order, 16. I have 16 trades in this statement. Okay, how many bullish? Well, bullish I have 1, 2, 3, 4, 5. Let's see, 16. How many bearish? Well, bearish I have 1, 2, 3, 4, 5, 6, 7. And I'm just looking at the delta there, by the way, guys. 5, 7, and then there are 4 neutral. By the way, a big part of this portfolio is that RUT actually has about, 6 different iron condors on it. So that's kind of part of it. Let's see. So 5, 4, 5, 7, and 4. So over here in my OPJS, what I would say is total trades, 16. Bullish trades, 5. Bearish, 7. Neutral, 4. My total delta, and I've done some stuff on this. I'm not going to go through it too much here just in this exercise, but I'll beta weight to SPY. and then look at my numbers here. It's not going to calculate the futures contracts I'm in. So what I need is 33, 49 is 70, 82. NA for the rut. Let's see here. Positive 72, 141. Okay. My beta weighted delta is about 150 positive. My daily theta. And let's see, 10, 14. The rut, let some expire. This let's see. Let's see the theta here. Selected total is another 109. So 110, 125, 135. Okay. So 135 positive. So my standard theta is 4,050. So my market posture on this, which will impact what I do, is we need to talk about that. So let's slow down for a second. Let's go through some of this stuff. Why do we keep score? Why do we keep score? Well, because you got to know who won. You know, I recently had a conversation with my daughter, who's a young 6-year-old kid, and she said, you know, somebody had told her at school, well, honey, it's okay. It doesn't matter if you win or lose. And she came home to me and she said, Dad, well then why do we keep score? Why do we keep count then? If we don't care who wins and loses, why do we keep count of who has how many points, right? And in some regard, I think there's actually a really good answer to that question, by the way. And the answer I gave her is because, honey, it really, you know, the lesson you're trying to learn in that game is just to have fun and get to know your friends. It probably doesn't matter, and probably doesn't matter who wins that game, but in general, you know, you do want to keep score on most things in life. I grew up with brothers. I grew up with a competitive household. I have 5 brothers. We kept score. In fact, we had to throw out a few board games in our life because we would fight over them. My mom would grab them and take them and huck them in the garbage and say, you guys can't get along, so you don't get to keep it, right? You know, you have to keep score. You have to keep record, too. How will you know if you did well or did poorly if you don't keep a record of how you're doing? OPJS is a simple thing. It's for those traders who want to keep score, okay? It's for those traders who want to keep a record of how they've allocated their portfolio. There are a few things that matter in the OPJS portfolio system. Number one is account value over time, or what we call an equity curve. We have to know how much money we're making or losing over time. See, this account value, and I'm going to go, in fact, I'll just bring up Marius's one that he did. Beta. So once you've filled this out for a while, by the way, let me show you what it looks like. Okay, this was the beta version of this. You'll see the equity curve. You might not have. Yeah, that's okay. We didn't fill it out. Beta 1.0. Maybe this one here. Yeah, see, the equity curve will come in and start putting numbers in for you. So like if your account value goes up 104,000, 102,500, 104,000, 104,200, 104,350, 105,000, 103,500. See, what it will keep track of is how much money your account is growing or losing over time. So then you have a picture of what your equity curve is. Once you get about 20 or 30 data points in, it becomes very, very helpful to take a look at this. So in the OPJS v 1.2 that we're filling out here, we want this relationship, the account value. Another thing it is very important that it's keeping track of is your percent allocated. How much money are you putting in the market? Because if I go in, and by the way, a lot of this is for mentors so that you can show a mentor. If I go in and see that a trader is starting to practice and they haven't used their money yet, I'll be like, well, why aren't you trading? Usually that will bring up a conversation as to what a trader's doing. Why are you not making decisions about what to do in the marketplace? Because if you can't put a trade on, you're not going to run an account. If what I see all the time is that they only have like 5 or 10% allocated, that will spark a conversation. There might be a good reason. Like, Tim, I was traveling to Italy, or I was traveling to, Southeastern Asia, or whatever it was. I didn't have the time. Okay, so you backed off. But now what are we going to do? What's your target? If down this list I see that the percent allocation changes radically and dynamically over time, that's going to spark a conversation with that trader as to why. What is the nature of this system? The total trades. So many traders, have to make a decision on position sizing and money management. How much capital per trade over time do you want to allocate in your total trades, bull, bear, and neutral relationships? If you can manage 20 or 25, great. If you can manage 45 or 50, great. Some people can only manage 5 or 10. You don't have to have the same system as somebody else, but it will affect your money management. And then the beta weighted delta. Let's have a conversation about this, okay? And so I'm going to put in trade allocation and then beta weighted delta, theta, and I'm going to call this standard theta. See, standard theta is your cash flow expectation, okay? That's how much money you're expected to make from cash flow. Beta weighted delta is your market posture. This number needs to be in line with your expectation on market movement. Market movement. I'll just take out MB, that's fine. Okay, trade allocation simply is your relationship. How many bull, how many bear, how many neutral. Percent allocated is how much money have you put into the market. Equity curve is how we keep score. It's at the end of the month a measurement of whether your account grew or faded. Did you make or did you lose? Now, in trading, you're not going to make money every single day. You're only going to make money if you've got a good system over time. There is no way to make money every single day. That's why we keep track of an equity curve. There are certain things that traders are looking at within an equity curve. What is your deepest drawdown? How much risk are you taking as trades develop? When the market does have a big move one way or the other, how did your account get affected? Equity curve analysis is really important for most traders. Now, if you're going to run an options portfolio, consider using the OPJS. If you're running a Forex portfolio, you probably need a different spreadsheet. This is mostly for options, okay, because of what it does. OPJS, Options Portfolio Journaling Spreadsheet. So consider that before you dive in and start using options portfolio. Now, let's get the rest of these numbers and let's talk about them. Market posture. Market posture. You guys know what an equity curve is. You know what some of these terms are. You've probably also heard the term about standard deviations, distribution. See, market posture can range from 0 to 1 to 2 to 3. Let me get a new paint program up here. I'm going to try to draw this. See how good I am at drawing in paint. -3. -2, -1, 0, +1, +2, +3. Market posture is a bell-shaped curve. Okay. And that'll have to do good enough. I know that's not your bell shape we're looking for. Actually, let me see if I can draw it different then. Hold on. Just get the drawing tool. Good enough, okay? Market posture is a bell-shaped curve. Essentially, in most market conditions, you should be neutral. Some market conditions, you should be slightly bearish or bullish. Every now and then, you're going to be aggressively bullish or bearish. And sometimes you're going to get really extremely bullish or bearish. Most of the time, I'm going to be neutral. Okay, so neutral. When you're neutral, you should be in the middle somewhere right here. When you're bullish, you should answer that you're a +1, a +2, or +3. When you're bearish, you should be down here at the bottom, -1, -2, -3. So essentially, every day, if I'm filling this spreadsheet out, I have to ask myself, what's my opinion on the market? And the time frame, by the way, depends on the time frame that you trade. Since I'm a position trader that tends to hold on to trades for a few days to a few weeks to a few months, I'm going to look at, well, what do I think is going to happen over the next month or so? My portfolio delta is bullish, but I'm actually a bearish trader on the market right now. So my daily observation, so I'm going to say -1. That's my personal take on it right now. So because my take is -1, but my delta was positive, see, that's a problem. I have to move my delta to a -1 posture. Okay? So this is telling me that my opinion on the market is not reflecting my account. That's the point of this journaling system. So what I have to now say is, need to add bearish trades to change the delta. That's what has to happen. So because my posture is not reflective of my delta, then I need to do something about it. Now, by the way, there's a tab down here called delta weighting that will show you from a bullish standpoint or a bearish standpoint what you should have in terms of your delta factor, the delta percentage that came out. Now my delta factor is only 0.09. Okay, come back over here to delta weighting. 0.09 is well in line with being neutral in the market. You know, I'm right in here, that's fine. You know, I'm close to neutral, so if I was neutral, that'd be fine, but I'm actually -1. I need to get that delta into the negative. The only way to get delta into the negative is to go and put on a bearish trade. So now, this is where it's really cool. Now I know to go back to TTOS and fill out a few bear call spreads to start moving the needle. Okay, so we're going to go find a couple of candidates. And why don't we just pull up the charts. Bring up a few of our credit spread candidates like Baidu. Well, Baidu's sitting at resistance in a downtrend. Chinese internet stock that has been generally bearish. All right. Let's see here. Move this out of the way. There we are. Open up my public list or my personal list. Got a bunch of watch lists. Credit spread candidates right here. And let's look at some in a downtrend. Actually, look at the bigger names. That's fine. Amazon tends to be more bullish. Goldman Sachs. Hey, there's a good candidate. Lower low, lower high, lower low, lower high, lower low, lower high, hitting its head. We light it up on the spreadsheet. So we put in over here Goldman Sachs. Okay. Now I like to at least get 2 or 3 candidates so that I can compare and contrast. Baidu we looked at. I think Baidu's definitely a candidate in a downtrend showing weakness. Okay. IBM. Downtrend about to hit resistance here. Definitely. Amgen. There's a really good one. Okay, old support, new resistance, in a downtrend, finding the moving average. There's a really good candidate. So let's go to TTOS V4 and plug in AMGN. Now, so what do? Well, we build bear call spreads. You know, we follow our rules. We go to the Analyze tab. We open up enough strikes to get what we need. We start with Amgen because it was the first one we had. We follow our delta rule. We got to go 30 days out. We're going to need all the strikes because deltas need to be really low. We're going to find this 17 delta. The lower the delta, the better. Actually, yep, that'll work. Right click, we analyze a cell vertical. Okay, we build this in right here. I like 5-point windows. Now this is a November 155 160 78-cent credit. So we go here. Price of the stock is 143.14. The ATR is on the chart 5.29. The expiration month we did was November. It's 32 days. We said we're going to sell on the Analyze tab 155 160. And this was a 0.17, 160. The net credit was 0.78. BPE is 432. Okay. Actually, I think we got to make this 78 total. All right, so the ROID says it's green, but the ATR says it's yellow. So we've got a little bit of cushion. It's kind of, you know, a caution flag there. The cushion, amount of distance between our stock price and our strike price. But the ROIDs look good, and we feel confident with the chart. Could be a good candidate to trade. Position size according to our rules. We're going to do 20 contracts on this one. Confirm and send, and push that thing through. So in trading, by the way, look at what just happened. Amgen alone, by adding that one bearish trade, and just to give you an idea of how we're doing this, was an extra, and we are still beta weighted, negative 83 delta. So now I can go and adjust my OPJS. What was beta weighted delta 150 now is minus 83 of that, so 67. So I just changed my delta factor down. So, and now I have 8 bear trades and 5 bullish. Okay, so I'm adjusting this over time. The thing about trading is you don't have to, it's like driving a car. You know, you're not going to crank the wheel 90 degrees to the left when you're driving down the highway. Make little adjustments to keep your wheels in the lane. So we take a trade or two every day, and then we move on to the next day. We don't try to build Rome in a day. We take it one step at a time, and then that's how we can keep a very structured and organized portfolio. All right, the last thing I want to talk about is one of the spreadsheets that I gave you is copy of strategy matrix, the strategy matrix. Now, many of you will have heard the names of all these different strategies. You know, what is a bull call? What is a bear put? What is a bull put? So on and so forth. You'll notice that I've put in here, just under where it says strategies, the names of a lot of the strategies that you have. You know, is it bullish? Is it stagnant? Is it bearish? Okay, covered call, bull call. It shows you the rules as you take your mouse down them. This is just to keep your life a little easier, okay? Keep your life a little easier, and I just wanted to include it. So if you don't know the name of a strategy, this is just kind of a quick little cheat sheet to give you an idea of what it is. Whether volatility helps or hurts, whether time decay helps or hurts, and so on and so forth. Okay, guys, appreciate it, and, you know, get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.